Okay, so what we're looking at is the candles and the information that's in a candle. We've covered the first two already. The first thing we find is overall direction. The overall direction. My black candle in this scheme is going down. My white candle in this scheme is going up. The second thing you find in every single candle, the second out of five, some people say four, but I say five, is the opening price. The opening price on candles that move up will be right here at the bottom. Not this little wiki bit, not the bit on the top, but the body, the block. Right? I should have explained that the candles are made of bodies and wicks. Right? You can see the wicks, the little sticky bit at the top and at the bottom, and the solid bit is called the body. So for upward candles, the opening price is at the start of the body. And the closing price is at the top of the body, right here, right? All of the upward candles, the closing price is at the top of the body, right here, okay? And then I know what clever people think, well, what's that little sticky bit? What does that tell you at the top? What does that tell you then? Just our closing price. Okay, so you get two other pieces of information within every single candle. As well as the overall direction, the opening price, the closing price, you also get the lowest price of that period and the highest price of that period. All right. So you get on this white candle here, the lowest price would be at this point, and the highest price, you can't hardly see it because the candle closed right near the high on this white one here. So you can't see much of a wick on this one because that candle closed right at the high. But on this one next to it, you can see it opened here, it closed here, it had a low just right here. The high was up here though, and then the price dropped to close here, right? That's on an upwards candle. On a downwards candle, let's zoom in a little bit so it's nice and clear. You've got the opening price, which is at the top of a downwards moving candle. You've got the closing price, which is at the bottom, but the wicks will still be the same. They will show you the highest price of that period and the lowest price of that period. So the 5 pieces of information that we get in every single candle: closing, overall direction, opening price, closing price, the highest price, and 5, the lowest price. And you'll find this on every single candle without fail, unless you're using different, like Heikin-Ashi, which is a different type of candle, right? But if you're using Japanese candlesticks, you're going to find these 5 pieces of information on every candle, and they become very important and they can be used differently. Now, what's interesting is that I looked at these candles on the weekly time frame, right? This is 1 week's worth of information in here, 1 week in here. All of these represent 1 week worth of information. But I can equally zoom in and look at a bit more detail. And it's good. We don't often trade from the weekly chart. And so I can click on here, and this means 1 day. And what that means now is that every single candle, instead of representing 1 week's worth of information, each candle represents 1 day's worth of information. But the principle is exactly the same. That is the overall direction, opening price, closing price, highest price, and lowest price that is found within each and every single one of these candles. You can see, here's an interesting one. The highest price of this candle was all the way up here. The lowest price was down here, but it opened and closed round about the same place. A little bit of an upwards move, but this one here opened and closed almost at the same place, had a high all the way up here, had a low down here. If you are looking at candles, this is a very, very good reversal indicator. This says to us, the market is getting ready to move in the other direction, along with a few other things. It's a very, very good reversal indicator. All right, cool. So what we covered so far, 5 things that are in a candle and the time frame, right? You can look at it on a daily time frame. Often, a lot of people use the 4-hour time frame. Same thing. Each candle represents a 4-hour period of time. and it tells you the same 5 pieces of information for that 4-hour period of time. And you can continue to drill down 1 hour, 15 minutes, 1 minute. You can even get candles which form seconds, right? When we get really in depth, you can get 30-second candles, open, high, low, close, overall direction for every single 30 seconds. All right. So you can do that, but we're a little way away from needing the seconds chart at the moment. So once you have an understanding of the 5 pieces of information that are in each candle, and the fact that you can have these 5 pieces of information on different time frames, now you need to understand what we call trend, right? Whether you're on cryptos, whether you're on indices, you might be trading the US stock market or the UK stock market. You might be trading a specific stock like Apple, like Google, like Tesla. It doesn't matter. All of these principles are exactly the same. And once you lock it off, you can apply this to all of your investments. It's wonderful. It's a really beautiful thing to be able to look at a chart and say, well, time for me to exit out of my EasyJet shares right now because they've reached a peak. They've started to turn around. It's very important information. So we start by looking at the overall trend. And this is not trading right now. This is charting. This is how to read the chart and how to know when to enter your where and when to enter or exit your trade. Clemmy, I know you sent me a question. I will not forget to answer that on this call, bro. Okay. All right. So I'm going to delete this so that it's off the chart. So I think anybody can look at this. Anyone can look at this chart here. And if I was to say to you, okay, someone tell me what is the overall direction of this market? I think everybody would be able to say to me quite clearly that the overall direction or the trend is going in an upwards direction. Really simply because down here we're at a low, up here we're somewhere near the high. And we can see that overall there is a movement in an upwards direction. But importantly, as you can see, the market never goes in a straight line. Rarely goes in a straight line. This is as straight a line as you're going to get right here. This is as straight a line that you're going to see in the marketplace, maybe a little bit here, but a market does not move in straight lines. Big dip, yes, of course, big dip. But overall, what you're going to see is a series of impulses. That's an important word. You're going to see a series of impulses and a series of corrections across everything, right? A series of impulses and corrections. Let me show you a few. Jerome, you with me so far, bro? Everything cool?
Yeah. I'm just trying to log in again while I'm listening to you. But yeah, cool. I fully understand all of what you shared so far.
That's brilliant. Okay, cool. We'll keep it moving now. So the market never moves in one direction. It's always going to be a series of impulses and retracements. Yeah, impulse, retracement, impulse, retracement. Every time. In fact, to be quite honest with you, if we look at this properly, this one here is actually a new impulse, right? This one here is actually a new impulse. If we're being really technical, let me say the right thing. This one here is a retracement, and this one here is another impulse. All right. So why is that? Because this point represents a reversal. I'll come back to that. We don't want to get too deep. Okay. All right. Lovely. So let me take these off the chart. These arrows. So what we want to do is start from a low area. Really important. You've got to be able to do this across every time frame. If I was drilling this like we was in school, you know, I would set an exercise to do this across multiple time frames. But we're going to start from an area which is around here. Let's just call this our low. All right, we'll call this area our low, and I'll write it on the chart. And we need to be able to identify the higher highs, right? Please, and guys, if I go to a chart, you'll see that I do this all the time. So I'm not even telling you something that I don't do. I still do this. I still do this as a competent trader. This is our low area. From the low area, we want to say, okay, where is the higher high? Well, this is the first peak. all you're looking for is peaks and troughs. Peak and trough. Let's call this a peak and a trough, right? That's really what you're looking for here. So this is our first peak, and we, in an upward trend, we label this first peak as a higher high. So let's label that on there as a higher high. I'll just put it in shorthand for now, but HH means higher high. Got a nice little background and a border on it there. Color we have. Background, we'll put a background in black, and we'll put the text in white. Where's my text? Okay, cool. Black and white is just clean. It's doing it for me right now. Okay, so we've got the higher high, and then you need to identify the peak, which is a higher low. This low is higher than this low. All right, this low is higher than this low, and so we can label this one here as a higher low. And I highly recommend you practice this. Even go and copy this on the exact chart I'm doing now, euro dollar 1 day chart. You go and practice this. Okay. Then where is the next peak? Right. Yeah, there's a few of them in here, but we want the main one. There's a few peaks here, but let's take the main one. It's over here, right? So I'm going to go and drag this. And now we have a new higher high, a new higher high. And then simply you keep on going. Where is my next higher low? Well, this is the area of the higher low here. And so you can just drag this like that. Let's call this the higher low, this one. And then we have one more. Here's the peak. And this is our last higher high for the time being. Now, this drill here is so important. So I don't know, Kaylee, Clemmy, I'm going to speak to Jerome because me and Jerome, we both play golf. We love golf. And so I'm going to make a golf analogy, which Jerome will understand. I hope you understand it as well. So Jerome, you know that when we're playing golf, one of the first things we're taught to do is how to grip the club properly, right? Or tennis or whatever sport you might be doing. If you're doing racket sport or anything where the equipment is in your hand, one of the most important things you can do is learn how to put your hands on the club properly. Now, there are maybe two variations. Maybe you interlock, maybe you put it over the top, but those are the only variations. Other than that, the grip is pretty much standard. And I was always taught that everything starts with a good grip, This exercise is like learning how to grip the club. If you can spot your higher highs and your higher lows, it's really important. Not only that, if you can then start to identify your lower lows, which is here, lower low, lower high. We keep on going. There's another one down here. Oops. This is a lower low. And we'll leave it there for now. There's some stuff happening up here. All right, so we'll leave it there for now. Once you can identify it like that, this is really good. It tells you, well, I was in an uptrend, but everything now tells me I should be coming into a downtrend. Right? Should be. There's some stuff happening in here which is quite interesting. So we could be going into a downtrend. Someone is banging down my door. Hold on 1 second, please. Give me 1 second. I'm just gonna see why they're not answering the door. Give me 1 second. Apologies. I'm sorry about that. Okay. So I hope this bit makes sense, right? I hope this bit makes sense because it is really the foundation of knowing how the market moves. Now, having seen it on a chart, I'm actually going to draw something for you because what I would like you to understand in your charting is being able to spot when the trend is changing. Now, essentially what we will have is we will have this. And you'll see it, it's exactly the same. Impulse, correction. Let me use a different tool. You'd have impulse, correction, impulse, correction, impulse. All right, let's leave it there for now. Now, importantly, I'm going to introduce a really kind of trading word that you might have never heard before. The market does the same thing across all the different time frames. So in the same way that I said to you, the candles will give you 5 pieces of information, whether you are looking at the weekly or the daily or the 4 hour or the 1 hour or the 5 minute or the 1 minute or the 30 seconds. It's the same piece of information in every single candle. Well, the market also moves the same way, whether you're looking at the daily, the 4 hour, the 1 hour, the 15 minute, the 5 minute, 1 minute, or the 30 seconds. It moves in what we call a fractal nature. That means the patterns are the same, they just happen faster or slower. That is really it. They happen slower on the longer time frames, like the daily, the weekly, and the monthly. And the same patterns happen faster on the smaller time frames, on the 1 hour, 30 minute, 50 minute, 5 minute, 1 minute, 30 seconds. Same patterns, just faster or slower. So we could drop down onto any of these time frames and we could see impulses, impulse, correction, impulse, correction, impulse, correction. But on this 1 day chart, there's something that's happened at the top here, which we can't see on this chart. But if I was to, do you know, like sometimes when you go to a shopping mall, they say, you are here, right? And they zoom in, right? Well, I want to zoom into this area here. And we'll show you what would be happening on the lower time frames. On the lower time frames, you will see something that looks like this, right? It will inside here, this will look like this. Okay, so if you can imagine, if we make this box just a little bit bigger, that where I've actually drawn a straight line, this is what it looks like if you were to zoom in on the lower time frames, right? So I've just drawn it as a straight line there, but in reality, what's happening at a faster rate is that the market is doing the exact same thing. Look, impulse, correction, impulse, correction, correction, impulse, impulse, correction, correction, impulse, right? And that is the impulse, but inside here it's happening like that. So I wonder if I can take this out. This is what I'm going to do. Oh, this is what it is. I'm going to move that over and do it like that. Okay, so now hopefully this will be a little bit clearer, that instead of just having the one impulse up, that inside this box, what I've actually done is drilled down into a lower time frame. I see the exact same thing has happened all the way on the higher time frames, but happening at a faster rate on the inside here. All clear? I hope that makes sense. Jerome, does that make any sense?
Yeah, I fully understand that.
That's perfect. I know Clemmy gets it because we've covered this. Kaylee, if you're still with me and you can type or you can say something, let me know if that makes sense, please, on the chat, because this is quite good. It's quite important. If you're still there, I'll keep going anyway. And if you need me to explain, please, I'm more than happy. So we're working with a series of impulses and corrections. Even inside here, the same thing is happening inside here. I'll just draw it next to it, right? Inside here, that's all that's happening on the lower time frames. Like that. Oh, that's it. So this is a representation of what's happening inside there on the lower time frames. And so it becomes really key, really key to be able to spot what we call, I'm going to throw another word in here, a change of direction or break of structure. when is the market breaking its structure of higher highs, higher lows, higher highs, higher lows, higher highs? Well, now we have our first lower low. So at this point in here, this is really telling us that on the shorter time frames, we're starting to see a change of direction. And likely what happens from there is we start to see this type of move: impulse, correction, impulse, correction, impulse. All right. So what I'd like you to do, and you know, I always say on these calls, I want to leave space for questions. I want to leave space for understanding. It's no point talking and talking and talking, because ultimately we want to get you trading and executing on the charts. But you will all need access to tradingview.com. If you don't have access to this, you're going to need access to this tool, this charting tool. This is free. I'll send you the link if you don't have it, but it's very easy to find. Tradingview.com. At this stage, I would just register for the free version. You still need to register, but just take the basic free version. At a point where you see like, yeah, I'm really getting this, then to stop the adverts, you can actually take the paid version of this account. I don't force these sessions to go to 1 hour. I don't force them to go to 1 hour at all. I just want to drop little pieces of information, make sure that everybody is understanding and making progress on this. All right. So here we are on the 1 day chart. My schematic is very, very similar to what's happened. It's perfect. All right. We've seen a low. We've seen a low. We've seen a higher high, higher high, higher low, higher low, a higher high, higher high, higher low. Here's the higher low. All right. And then we've seen this last move, which comes up to this higher high, which is here. And if we look closer, let's just drop down onto one time frame, and I want to take this box is going to be represented. I'm going to take the exact same box, just put it in here, and you'll see some stuff happening here on the lower time frames. If we go down onto let's do the 4 hour. Okay. So that is the box that we drew. And now we've just zoomed in a little bit. I'm going to take the box off. We see a peak. And really, really importantly, what we see here is that the first drop comes below, just a little bit below. It's not a lot below, but it comes below the last lower low. Sorry, the last higher low. On the lower time frames, there's lots of higher lows in here. You could put lots more in. There's a higher high, higher low, higher high, higher low, higher high, higher low, last higher high. We can draw them exactly the same as before, just on the 4 hour chart instead of on the 1 day chart. I'm not going to put them all in, but I'm sure you get it. Higher high, higher low, higher high, higher low. Let's call it that one there for now. All right. So whether you're talking about here or whether you're really talking about here, let's take the obvious one rather than the detailed one. This move, when the market goes below this point here, we know that it has broken past an area which was a higher low. And that tells us, all right, something's getting ready to happen. Even if you don't catch the reversal from here, there's ways to catch the reversals up here that we're not too worried about that, right? We can look down on the lower time frames and catch the reversals up here, right? We can see the market distributing, getting ready to sell. But even if you don't, even if you miss this, you know, let's take, you know, the US stock market. Even if you miss the first impulse down when it happens, or the first impulse down to here, we know for sure that the psychology of the human mind has to test whether the market's really moving in this direction. And so we'll see a move up, and this is where we can enter into our trade to catch the move lower, right? So this is what I'd like you to do real simply. I'm gonna answer Clemmy's question that he sent to me earlier on today. I'd really like you to go onto your trading view. This is the exercise, right? Trading view. Now I don't want the background. I'll take the background off. Actually, going to go into trading view. I'd like you to go to euro dollar on the 1 day chart. And also Bitcoin on the 1 day chart. And please, if you can simply mark out, if you can and send this to me, I'm going to show you how to send it to me. If you can simply mark out your higher highs, as you can see, just aim for the peaks and the troughs, your higher highs and higher lows. And definitely on Bitcoin, you will see a series now of lower highs and lower lows. All right. So please mark those out in the same way as you see me do it here on the chart. I'm going to delete these off for now. So mark out the low and the series of higher highs, higher lows, higher highs, and higher lows. You don't need to do, I'll give you the tip, you don't need to do every single peak and trough. Really important. Just go for the major ones. Yeah, just go for the major ones and it will point you in the right direction. So higher high, higher low, higher high, higher low, higher high. And then when you start to see the market moving in a downwards direction, that's when you start to mark your lower lows and your lower highs and your lower lows. I'm going to give you one tip. I'm going to give you one more tip before I go to Clemmy's question. This is actually quite important. Let me go to text. You should have pairs. You should have pairs of higher highs and higher lows. All right, so this is going to be our low. Now, you should have pairs. And it's the reason why I didn't mark this in. The pairs go like this. I've got a pair from my low to my high. Bang, it's in. I've got a pair from my next higher low to my next higher high. It's a pair of them. They go together. They work together. And then you've got a pair, higher high and higher low, another one like here. All right. So I've got 3 sets. If you end up with like a higher low, let me just do one. If you end up with something like this that looks like that, and you can't match it off with another pair, you've gone wrong somewhere. So you'll have to delete one or add one. All right, but they should work in pairs. Really, it's really important. It's so cool to be showing you this like at a basic stage and knowing how important this is down the line. Just mark them off in pairs. All right. For your lower highs and lower lows, then you have, look, from this one, because we're going in the other direction now, we can use this one again. This has now become a high. High to the low is a pair. The lower high to the next lower low is a pair. All right. So just mark them off in pairs. We're going to have one probably from here to here somewhere. That's probably, and I might even, depending on what happens, move it. You can adjust it. It's no problem. It might even move to something like that at some point in the future, because this high is a lower high, is actually lower than this one. But we need to see what happens, how the market develops, right? We're not 100% sure at this stage. So just mark it as you see it and make sure that they are all in pairs, and then that will be good. That will be good work done. To send it to me, to double check it for you, to send it to me, all you need to do is click on the camera, and this camera will bring up a URL, and just copy that, shoot it to me in WhatsApp, and I'll be able to bring it up on my screen, and we'll look over it for you. Click on the camera. It says image URL. Click on copy, and then paste that URL into your WhatsApp chat, and I'll be able to look at that chart for you. So exercise for now, and that can be done whenever you can. Send it to me. As soon as you do it, I'll check it. Go into TradingView, look at euro dollar on the 1 day chart, look at Bitcoin on the 1 day chart, and just mark out your simple high highs and high lows. If you've taken a picture of this one, then you've got the first one done for you, basically. All right, you've got the first one done for you, but do the practice. If you get really good and you find this easy, I'll put it as a little, in schools, right? It's so funny. In schools, they've got stuff which says The kids are studying at greater depth, so they've had a little bit of extra work to do, right? They call it GDS, greater depth study. So if you want to do it a little bit deeper, then you can do this same thing on the 4-hour chart. Right, it'll be a little bit, you'll have to think a little bit more there as well. Okay, cool. Let me stop the share for a second. Clemmy, my guy, you sent me a question. Boom, 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 boom. Clemmy, what are your indications that you're not in a good trade and should get out? Oh, this is such a good question. Okay, I'm going to copy this. Okay, that's the question that Clemmy sent to me before the meeting. Clemmy, this is so good because I use exactly the method that I'm showing to you now. I use exactly this method. I think I can even go on to, the question matches perfectly with what we're studying. So let me share my screen one more time. And if I go over here to GBP yen, hold on, I'm currently trading GBP yen. Okay, so look, when I say to you, I literally do it myself. When I say to you, I literally put in my higher highs and higher lows, I literally do it for myself. Not because I have to, but sometimes it's like, I just think that it's a good exercise. My chart is nice and clean, and I know what I'm looking for next. So how do I know when I'm in a good trade? When I'm in a bad trade? Clemmy, this was an idea. This was one that actually happened. I was of the impression that maybe I could buy from around here. I can't even remember exactly what the trade was, but let's say I bought from around here. All right, let's say I bought from around here. Well, clearly you can see now that I'm in a losing position. I can take this off. So you can see that if I can't remember the exact trade, so forgive me if I'm not giving you exact details, but let's just say I bought from around here because maybe it was an equal low or whatever the reason was, and I expected the price to continue higher. All right. Well, look, at the point where it has broken this structure, which is kind of happening now, right? As soon as I see, I'm good for now, but as soon as I see a close below here, let's just see if that's happened yet. I'm going to go right to the body. Right. So this is a perfect example. I can be in this trade, expecting the price to go higher, and have made a mistake and the price has gone lower. But until I see a firm close below this last higher low, there's every possibility that we continue with the direction of the trend, which right now is an upward direction. So this is a perfect example. So although I'm in a losing position, this is hypothetical. Although I'm in a losing position from this trade, I don't like being in a losing position. I can say to myself, well, we haven't broken this last higher low yet. So there's every possibility that this higher low remains intact and that the market continues to go in the upward direction. Okay. Now, how do I know? Your question was, what are your indications that you're not in a good trade and you should get out? Well, at the point where I see this trade close below here, right, and make a new lower low, at that point I say to myself, okay, look, the market is clearly telling you that it has a broken structure. Very important. It has broken the structure. Someone's just joining. It's broken structure, and now I need to consider getting out of this trade. Hello, iPhone. Who's that?
Joel, it's me. I'm at work. Sorry.
Joel, my darling.
Hi, how are you?
Well, go on, baby.
Sorry.
Sorry, I just had, for those of you that are not Jamaican, I just had to drop. Jamaican 1, 2, 3, Julie. You didn't see that yesterday. What?
Yeah.
All right, listen. Thank you for joining the call. We're actually winding down, and I do need to catch up with you. Yeah. But Clemmy put in a really good question. What are your indications that you're not in a good trade and you should get out? And I'm explaining that this could be the buy position with an expectation that the price would be moving higher. And as you can see, if I did buy here, the current trade would be going lower, and I would be in what we call drawdown. I would be losing money here. Okay. But what I'm saying, we've done some stuff which you may not understand, Joel, but everybody that's been here so far will understand it, and I'll send you the replay. I'm safe at this stage. I'm safe because I'm protected by this higher low. The trend is going upwards. So I'm protected by this higher low. Jerome will get that from what we've studied today. Clemmy, Kaylee will understand it. However, at the point where I see the market close below this higher low, then I say to myself, I need to get out of this trade. I need to get out. How do I get out? I don't get out with panic. All right. I don't get out with panic. What I know is that the market rarely goes in one direction. So what I'm going to wait for, I'm going to wait for the retracement. I'm going to realize, okay, I'm in trouble. I need to get out. And I may not get out in profit, but I want to get out with the smallest loss possible. So at the break of this higher low, I'm going to wait for the retracement. I'm going to wait for the retracement. And when I see some form of retracement, maybe it will give me a little bit of profit, maybe it won't. Well, I'm not going to go into the details how and where to exactly to get out, but I'm going to wait for the retracement, knowing that the market is going to make what we call a lower high. Let me mark these in because they should be marked already. So this is going to be a lower high. Yeah. This here is going to be a lower low. Sorry, I should have done this correctly. Forgive me 1 second. Let me do this correctly. Let's do this correctly. Okay, and I'm expecting, we've got up here, and I'm expecting that this will be a lower low. So just before you joined, Joel, I said we work in pairs, higher high to lower low.
Okay.
But do this one, and we got a pair here. So at the point, what I'm waiting for now, I'm waiting to see where the next higher high is going to come, and that's going to be my exit. So Clemmy, to answer your question, that's how I exit out of these trades. Clemmy just he's got unstable internet connection, so he's just dropped off. But that is the answer to the question area. He's back now. Okay. So that's how I get out of this trade. At the point where I see a close below here, I'm gonna wait for the retracement. See a lower low here. I'm gonna wait for a retracement, and I'm gonna get out at the lower high. I may get out in profit. I may get out in flat. I may get out for a small loss, but I'm waiting for the break. And you can see that the way to get out of that is to wait for the break of structure. I say, okay, I'm losing. I need to get out here, right? And that's where I know I'm going to lose. So I get out. Clemmy, if you can type, if you're back and you've got your internet connection and you can type, let me know if that answers your question. This is how to get out of a buy trade. You do the same thing in reverse for a sell trade.
Okay,
yeah. I'm telling you, there's a couple of things that are going to be super important for you as a trader. Understanding market structure is massively important. Patience is the other thing that's important. Patience when you're losing. Imagine you're in a losing position here, right? You've got to be patient to know, okay, well, I'm going to lose this trade, or I'm not going to make money on it. I've got to be patient to get out at the best exit for the least possible loss. You've got to be patient to get in for your entrance for the lowest possible risk. Patience is key. That's a psychology thing, but also marking up these charts, you cannot underestimate how important that's going to be. Just do your higher highs and your higher lows, your higher highs and your higher lows. Okay. All right, we're going to wrap up. I hope that answered your question, Clemmy. Any more questions out of today before we move? I'll just go again and give you the kind of the exercises for this week. It's there. Okay. Jerome, all good for you, bro?
Yeah, no, everything's fine. Thank you.
All right, really, really good. I hope I haven't gone into too much detail. I mean, I've gone in at it's kind of a beginner, but it's high level, intermediate beginner level. It's not like into hard stuff, but this is mad. If you can mark these out, I'm telling you, you can make money on anything. As long as, so for me, even houses, even property. All I need to do is use the retail price index or whatever it might be. Any property that shows me the price of any chart that shows me the price of property, I know where to get in on the dip. Any chart that shows me the price of Bitcoin, oil, US 30, indices, whatever it is. If you can do this, mark your high highs and high lows, you stand in good stead to make money on any product. Okay. We're done. We're done for this week. We're done for this week. That's the homework. If you can do it, Jewel, just try to do your higher highs and higher lows on euro dollar and on Bitcoin. Okay. Higher highs and
Can you send me the recording, please?
100%. I'm going to send you the recording, no doubt.
Thank you.
As soon as it finishes, I'll put it up on YouTube and I'll send it to you.
Yes.
Guys, I'm going to be, listen, last year, 2020, we did this for 9 months straight, every single Monday. Boom, 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 boom. And I'm going to try and beat that run. Fingers crossed, I'm going to try and beat that run. Every single Monday, we'll be doing Money Monday. So lock it in the diary and we're going to get you there. Okay. Have a good one. The recording will be in the chat soon.
All right. Thank you.
Take care, guys. See you later. Have a good one.
Thank you very much.
Thanks. Bye.